Hey, welcome everyone to our second weekly crypto chat by Huobi Research. Here we aim to shed light on the hottest topics in crypto every week and give our take on it. So my name's Jet, and with me is my colleague Hansen. So we're part of Huobi Research, part of the Huobi Group team in total. Our platform basically aims to bring you guys insights and analysis on a number of different crypto topics and trends. So you can follow us at Huobi Research at Huobi_research on Twitter or huobiresearch.medium.com, where we have a bunch of different types of reports analyzing different types of projects. With the most recently talked about the Luna-depeg. So after our usual conversation, please leave us some questions in the channel, and we'll get to them at the end. Just to note, everything here that's said is not investment advice, and does not represent the opinion of Huobi Global. So just to know that. So Hansen, I think basically this week, I guess, has been a pretty long week, given the whole Luna-depeg debacle. I think the whole market, as a result of this, basically saw a significant amount of volatility throughout the whole last week. Right now BTC is trading at 38.5K, ETH at 2.1. The S&P is around 4,000, down 0.4%. Nasdaq at 11,662, down 1.2%. So it's been a pretty volatile week, with the headline risk, of course, being the Luna-depeg, which we'll be doing a post-mortem here on the channel just to give our take and just kind of give a summary. I think because like everyone kind of has seen the headline now for Luna, so I think it would be good to kind of summarize the whole situation now that the dust has kind of settled for the majority of it, and then we can move on and just give our takes on the takeaways on what we think the ecosystem as a whole would probably look like in the future. So let's get started.
Yeah, thank you, Jack, for the introduction. It's always a pleasure to be here chatting about the market. So here are the topics for today. Make sure to stay until the end to hear us talk about the Huobi Candy Drop event, where participants have a chance to win 1,000 USDT. So let's start off with the topic of Luna USDT-depeg.
Yeah, let's get started. So so with the Luna-depeg, as everyone's aware, basically the whole Luna Terra ecosystem completely collapsed within basically a week, where I think in total over $50 billion worth of asset value was wiped out. I think just from the Luna side, the market cap before I think last week was trading around 30 something billion. Terra USDT was around 18 billion in total. And as you can see, I think as a result of the USDT-depeg, basically the whole ecosystem has collapsed. And I think the main reason, I think there's multiple of factors, but let's start with, I think that the main catalyst, I would say, that really caused the initial depeg, which was the fact that so previously what was going to happen was UST was in a liquidity pool called the 3 pool on Curve, where technically it's put into a basket with other stable coins within the ecosystem, where people can trade in and out of it with relative ease and low slippage, given the fact that technically all the assets within the pool are stable coins. So what was about to happen was the fact that Luna, the LFG Foundation, was supposed to transition from a 3 pool to a 4 pool. So instead of 3 stablecoin assets, it was going to transition to a 4 stablecoin asset. So during that time, last weekend, there were so what had happened was they pulled up $150 million worth of UST in anticipation of this transfer of assets to the next pool. But I think what had happened during that time was, because of the fact that $150 million of UST was pulled out of the liquidity pool, as a result, there was an imbalance. And that kind of resulted in the fact that attacker basically on Luna and the UST saw an opportunity to basically cause the depeg by supplying by selling UST into the pool and basically kind of draining the liquidity from that, and that was the initial knock on the depeg. So I think initially the knock on the depeg caused the peg to go from 1 to around 0.6, and then after that, the LFG Foundation and the others started to kind of defend the peg and start deploying the assets and reserves in its basically arsenal. So that included the $3+ billion worth of Bitcoin, some AVAX and ETH as well. But basically, I think the peg kind of bounced back up to around 0.92-ish, and that I think when people saw the fact that the peg didn't stabilize immediately, and I think there was crisis of confidence, and basically that was what tipped over the whole entire thing afterwards, and it was a complete, I guess, utter chaos because of the fact that basically everyone was kind of running out the door in a very crowded, I would say, movie theater with just one door. So as a result, it was a complete chaotic event.
Yeah, could I have done better? And like, is that what could they have done to avoid this total collapse of the ecosystem?
Yeah, I mean, I think, yeah. So now that we kind of summarize the initial event and what had actually happened that caused, I think, the initial depeg and the fact that it was just a crisis of confidence afterwards. I think maybe it's good to take a step back to understand why there was a crisis of confidence to begin with, and I think this really needs to take a step back and understand Luna and Terra as a project. So so Luna, I mean, really, came onto the scene in 2021, where basically, I think at the start of the year, it was only, $1 billion or $2 billion in market cap, or $1 or $2, and basically it traded up to, over 100, basically at the end. And I think the main driving force, what was the fact that I think a lot of people might not have understood properly was how the UST kind of fed into the growth of the price. So for Luna and UST, they have a symbiotic kind of relationship because of the fact that to mint, basically to create more UST, an equivalent dollar amount of Luna has to be burned. So what that means is, so if I want to create one more dollar of UST, I need to burn $1 worth of Luna to make that happen. Okay, so I mean, initially, I mean that's not a major issue if you think about it, right? So if Luna's trading around $2 or $3, and you burn, let's just say $1 of UST. If you want $1 of UST, you burn basically, let's just say 50% if it was trading at $2 price. So 0.5 worth of Luna token for 1 UST. But as you saw with the price run up, when Luna was trading at $100, technically, in that situation, right, to mint another additional UST, you only needed to burn 1 out of 100 of a Luna share because of the fact that it is now trading at $100. So each Luna token was now worth 100. So technically, you can mint 100 UST tokens in this instead of the 2 UST tokens that you can mint when Luna was trading at $2. So I mean, if you think about that mechanism just by itself, right? You can see that because of the fact that demand increased and pushed up the price, given the fact that you need to burn Luna to get UST. After it got to a certain price point, the backing just wasn't as sustainable. So you can see in this table here on the left, right? If you look at it, basically it tracks the market cap and the Luna of UST and Luna, where just kind of dividing it out in terms of a collateral ratio, right? So basically this is Luna's market cap divided by UST. You can see that over the course of, the last 12 months, the ratio, initially, back in the summer of last year, it was at a pretty unhealthy ratio where it was pretty close to 1-to-1. And that was also, if people remember from last year, that was also around the time where there was a Luna-depeg as well. But that quickly got recovered because of the fact that the size and scale was a lot smaller. And there were a lot of VCs also backing and helping stabilize the peg, right? So at that time. So throughout basically the entire second leg of the bull market of last year, the price appreciation really took off for Luna. And as a result, you saw the ratio in terms of the Luna compared to UST to get comparably better and better. Where I would say at November, the peak of basically the second spike in the bull market, it was 6 times over collateralized. Okay. So this would have, in that situation, if there was a depeg, there would have been, I would say a lot less concern of a sustained depeg. But of course, during the good times, bad things don't happen. So as you saw, with start of this year and moving on, basically the ratio continually to deteriorate, and this was mainly due to 2 factors, right? So the first factor is the fact that the Luna price started to not go up as much. I think we did see highs in terms of price just around March, right? But to combine that though, right? I mean, even though technically we made new all-time highs on Luna around March, the increase of UST also significantly, dramatically increased. So if you saw in November, basically the market cap of UST was around 3 billion, right? 2.82, right? And then from there, by basically March, that did a quadruple at 13 billion. And at the start of May, basically it was at 18.5 billion. So as a result of the fact that more and more UST is now circulated in the system, relying on an ever so higher Luna price, when that price starts to decrease, there's a lot more leverage in the system because of the fact that the market cap of UST, or the amount of circulating UST, is significantly higher. And that's, that was, one of the main risks that I think a lot of people in the industry saw. And highlighted, I think, across Twitter, where you saw a number of people kind of flagging this risk. And that was one of the main reasons. And the second main reason was the fact that majority of this UST, right, was actually put mainly to work on Anchor. So Anchor is the savings deposit protocol built on the Terra ecosystem. So Anchor, what's so great about it is the fact that Anchor for the longest time was offering a 20% deposit rate for anyone that just deposited UST, right? So I mean, the main reason for why it was 20% was the fact that it was to kind of bootstrap liquidity and kind of increase the amount of demand for UST and kind of bring the money flows, so to speak, to the ecosystem. So this was technically very successful in the sense that it attracted a lot of money into the ecosystem, where basically the amount of UST quadrupled over a span of 6 months. But the problem is, I think as everyone is aware, globally, a 20% deposit rate on your just your money, I think for doing nothing, literally, you're just putting the money there and doing nothing with it, you get 20%. I think in even the craziest of times, that's a pretty unique proposition, so to speak. So if you think about it, right, basically, if majority of the market peaked around in November, people started looking to kind of park their money in stablecoins because of the fact that, like, for me, why would I want to take so much risk given the fact that I think everyone's starting to realize that the market was kind of looking like it was gonna drop. So as a result, a lot of this money piled into UST and Anchor because of the fact that even in a bear market, I'm getting 20%, which is great. And that was, the main reason why, the demand was so significant. But here's the problem, right? I mean, what is being done to fund this 20% ongoingly? So Anchor had a Anchor Reserve, fund, where basically they would be supplying this 20% yield ongoingly from this reserve that they fund through the Terra ecosystem, LFG. Okay. And what had happened was they previously had to continuously top this up to make sure that there is enough money to distribute to anyone that just puts money into Anchor. So this was topped up multiple times. I think the last time that it was significantly topped up was back in mid-February, where they topped up the reserve by 450 million worth of UST to ensure that the run rate of the 20% still exists. So this was a major issue, right? So if the 20% deposit rate was used to attract the capital, was that money actually deployed and used in the ecosystem for purposes? Because technically, if you think about it, right? If I'm a bank and I'm giving you 20%, but I'm not lending that money and making any money out of it, I'm technically losing money ongoingly, right? And that was exactly what happened for Anchor, because of the fact that the loan demand, as you can see at the bottom left chart, the black line was the loan demand. And basically, you can see that there was significantly a lower amount of loan demand relative to the deposits. So as a bank, technically Anchor makes no money and was losing ongoingly, paying out that 20%. So I think a lot of people realized this and was just hoping that, and it was also communicated by the LFG Foundation and DK and everyone, that they were gradually going to step down this 20% to something more sustainable. And I think that was, the reason why, a lot of people, were starting to feel like, okay, they see the problem and they're addressing it. And the concern was whether or not they're able to transition this smoothly. And, unfortunately, I guess, due to timing, before they could even make that transition, the whole thing collapsed. So, that's basically, I would say, the main two reasons why Luna as a whole collapsed, because of the fact that, technically there's nothing wrong with the protocol itself in terms of like the smart contract or the technical side. It did what it needed to do in terms of burning and minting of UST and Luna. It's really from a incentive dynamic where there is no real inherent demand for UST other than this 20% in a bear market. And that was what drove the significant amount of money flows into this ecosystem. So given the fact that there was no organic demand behind that, right? So when things go really bad, I think everyone immediately fled out because of the fact that there was nothing stopping this feedback loop, and that was basically the reason why. So
yeah. So what happens to other dApps and protocols after the Luna collapsed?
Yeah, So there was a good thread out on Twitter by DeFi Made here, which talk about the ramifications, I think, outside of just Luna and the core protocols themselves, and touched on also the Cosmos ecosystem as a whole, because of the fact that I think the UST was starting to spread out across the Cosmos ecosystem. A lot of people were starting to develop and adopt it as one of their main stablecoin, I would say, liquidity pools. So I would say during the whole DPEG, what really happened, what kind of really shed light on one part of, I would say, I don't know, for lack of a better word, some of the protocols, lack of I would say initiative, or for lack of a better term, basically lack of oversight, I should say, where they actually assumed that UST was $1, regardless of what market situation happened. So they actually, priced and inputted the $1 value into their contracts for UST, as opposed to using a real-time Oracle price mechanism to track the ongoing UST price. And as a result, if you think about it, right, like because if you think about US dollar, it's 1-to-1, why not need to worry about it? But because of the fact that, as we just talked about, Luna and UST is not a fully stable 1-to-1 currency, not having that real-time price reflected of UST allowed a lot of arbitrageurs to basically take advantage of this, and sell UST at $1 to these protocols, and buy, I guess, in the market at significant discount, and basically drained a lot of these projects TVLs significantly because of that. Because again, until this was fixed, the project or that smart contract or that protocol assumed that UST was trading at $1. So, which is pretty crazy if you think about it, right? Because of the fact that this was not programmed in to actually reflect the real price. And I think as a result, there was significant amount of contagion across the whole Cosmos ecosystem, not just even talk about the Terra ecosystem. So yeah, I mean, it was pretty crazy overall.
Yeah. So, so how has this incident affected other stablecoins in the market? And are we going to see more regulations coming from the US SEC because of this?
Yeah, I mean, I guess like for good or bad, I mean, this was actually this initial DPEG actually happened on the same day that Janet Yellen, which is the Treasury Secretary, testified in front of the Senate. And UST was actually highlighted in one of her comments, and the whole DPEG situation was actually talked about. And in that hearing, basically what she said was, she expects that it will be highly appropriate to aim for passing a legislation on stablecoins sometime this year. I think because of the fact that stablecoins are such a systemic part of crypto, and there's a significant amount of risk associated with the fact that if everyone's denominated in US dollars, any type of DPEG situation like this would significantly jeopardize everyone's, I would say, investments, right? So this was exactly what happened for USDT. So Tether was the fact that after the whole UST situation happened ongoingly, so on the 12th, basically people were worried that potentially USDT Tether was not backed 1-to-1. And as a result, people started, redeeming it and trying to basically get their US dollars back. And this fell to a low of 0.9 to 1 during the Asian hours on the 12th. And the main reason, as per one of the trading firms, QCP Capital, was the fact that so USDT apparently had certain redemption restrictions in certain Asian countries. So and this is mainly due to regulation, I think. So as a result, they couldn't fully allow the redemptions to happen during Asian hours. So they were not able to clear it, and basically everyone, I guess, was worried. Especially retail was overly worried about the whole situation about USDT and potentially a DPEG, and just continuously sold into it. But then basically by the time that European hours open, Tether and the whole group basically cleared $2 billion worth of redemptions immediately for 1-to-1 with no issues. So I mean, the market tested it, but basically no issues there. And I think we were able to move on without further, I would say, concerns in regards to the whole situation. And I think that's where we are. I mean, and so I guess moving on, right? So what's the outlook for the Luna and Terra whole ecosystem. So DK Do Kwon published the second version of his proposal in terms of the aftermath of this whole USDT-peg situation this morning here in Asia, hours. And what the proposal basically included was the fact that they were gonna fork the whole chain and airdrop tokens to basically all those that were affected with certain snapshot dates and stuff. And that was kind of the proposal that was laid out to potentially, make people that lost money, whole. I wouldn't say whole, but like probably in a better situation than they are currently now. But I mean, for me, my personal take is there are a number of questions around this proposal. So first of all, if you look at the proposal in terms of the airdrop amounts that were divvied up, I think 35% was actually divvied up to or are going to be allocated to Luna holders at a snapshot date. So a snapshot date means basically they're going to capture a certain point in time to determine whether or not you qualify for this airdrop. And this snapshot date actually has not occurred yet, and it actually will occur on the launch date, which I think is on May 27th, which is crazy, right? If you think about it, basically a lot of the people that panic sold Luna and UST probably will not qualify for this part of the airdrop because of the fact that if I see a depeg, so for my situation, I didn't have any exposure to Luna, but if I just saw the depeg and it bounced from 60 cents to 92, I'm probably gonna sell all my UST, right? So I wouldn't be holding any UST at any point in time after that, and as a result, I would not qualify. Same with Luna holders. If some Luna holder saw the price go from $80 to $20, sometime in between that, they're probably gonna sell it, right? And not look back. So I mean, this 35% airdrop to people that are holding it sometime between now and launch date of May 27th seems a little a little weird for me personally. And in addition to that, I would also question the fact that for this airdrop as a whole, there are certain lockup periods, investing schedules associated with it. I mean, this is more of a personal opinion, but I think associated with this 1 year cliff and multiple year investing schedule, if I'm a investor or I'm an ecosystem developer or a developer that wants to develop on the Terra ecosystem, I have a significant amount of people looking to sell their tokens as soon as they unlock because of the 1 year cliff investing schedule, right? So as a result, if I and given the fact that price appreciation of a token is the best marketing tool, if that is the case, because of the fact that there's a 1 year cliff investing schedule, I for sure know that after this 1 year, people are going to continually dump on me to make back their investment because of the fact that they lost so much money as a whole from the whole situation. So this 1 year cliff investing schedule, I mean, from my personal opinion, this might deter people that are looking to potentially invest and start up the whole new chain because of the fact that why do I want this overhang? Potentially, having to worry about if I'm a person looking to long term invest in this ecosystem or to develop on it, right? And yeah, I mean, and then I guess that also brings on to another question of Terra system, the Terra ecosystem as a whole, and whether or not there are enough parts, I think, that warrants saving, so to speak. Because right now, I mean, I think right now, based on the valuation, Luna is still trading over $1 billion. Because of the fact that people feel that there's a network effect and a certain amount of ecosystems, ecosystem projects within it that is worth saving. But I mean, so I took a look at it this morning at the top 20 projects on the Terra ecosystem, and I would say probably half of them were reliant on either UST or Mir. So Mir is a synthetic asset platform that basically gives you rewards for liquidity providing, and Anchor. So over half of the projects that are in the top 20 total value locked are reliant on these three major protocols and incentive schemes to run. So if you think about it, right, if this new fork doesn't have UST as a center around it, and Anchor as a whole doesn't exist, and Mir, which is the synthetics asset platform, probably also doesn't exist in its current form. What's the value, right? I mean, if you think about it, right, like half of these projects are reliant on these three to kind of yield, basically the yield optimizing, yield farming strategy protocols, where basically they try to find you the best yield in terms of the different farms, and a large number of them are heavily reliant on these farms from Anchor and Mir to operate. So if those are all gone, right? So what's the incentive or value being driven and accrued in these projects, right? So I mean, for me, I mean, there's a lot of question marks in terms of whether or not they can actually sustainably migrate to this chain, and whether or not there's significant amount of interest that still remains from the developers and the people that want to build and invest on top of it. So I mean, for me, it remains to be seen. I'm personally probably just gonna observe the whole situation, probably not gonna take part, because of the fact that I think there's just too many question marks at this point in time. So yeah, I mean, let's move on.
Yeah, let's move on to the next topic of Coinbase earnings. So Coinbase in Q1 have reported a net loss of 1.16 billion in revenue, and which was way off the estimation of 1.5 billion. And total revenue have dropped around 27% from a year ago. And this is mainly due to the drop in transaction volume. So I think Coinbase earning loss and lower transaction volume is a signal that the cryptocurrency market hype has finally died down, and we're finally in a bear market territory. And furthermore, Coinbase news disclosure stated that customer holdings can potentially be considered a property of Coinbase in the case the company goes to bankrupt. So I think as a crypto investor, you should be you should be aware of the differences between custodial wallets and non-custodial wallets to better protect yourself and your coins.
Yeah. I mean, yeah. So I guess let's break it into two parts, right? So first of all, in terms of the Coinbase earnings, no surprises there in terms of the fact that I think revenue traded down to expectations, because of the fact that I think as you rightly said, hasn't there just was lack of a lower amount of trading, because of the fact that I think a lot of people got burned, and active users count basically decreased. And then to the second point, right? So within the disclosure, of some new disclosure, because I guess of regulatory reasons in terms of the definition, like you talked about, so in a potentially event of bankruptcy, the crypto assets that is held, if you hold crypto assets on Coinbase, potentially those can be seized, and you have to go through to and be subject to a bankruptcy proceeding in case Coinbase goes under. I mean, of course, I think even though revenues decreased, and they recorded a loss for the quarter. I mean, in my opinion, there's probably very, very low probability that Coinbase is going to go into bankruptcy. But I think it highlights a key point that even though there's a lot of FUD apparently on bankruptcy, I'm not concerned about that. I'm more concerned about the fact that they've disclosed the fact that if you put your assets on Coinbase, or probably in this matter for any type of exchange, right, centralized exchange, they have, ownership, so to speak, when push comes to shove. And you would not have access to those assets, which is pretty crazy if you think about it, because of the fact that I think in other types of assets, I think up until a certain point, there are certain protections, depending on the country, I guess, you live in, that is offered by regulators to ensure that people, does not have this happen. So it was pretty surprising to see that, and I guess it just further highlights the fact that for crypto, like you said, Hansen, I think if it's not your keys, if it's not your private keys, then those are not your coins, because when push comes to shove, in the worst of the worst situations, those assets can be seized and taken away from you. So pretty crazy, but I guess it's a good reminder just for everyone, the fact that this is the case, and this has always been the risk of centralized exchanges, because of the fact that they have to adhere to the regulations of their local jurisdictions. So
Yeah. Moving on to the next topic, we have some NFT news updates.
Yeah. So yeah, I guess I guess let's move on to something I guess not as so gloomy and doom. Is a game called Illuvium. So earlier this month they announced the land sale, the inaugural land sale, which will be happening at the start of June. So the reason that we highlighted this project out is because it's one of the, I would say, crypto OG projects that is pretty well known across Twitter, because of the fact that the founders are the brothers of basically Kane Warwick, the founder of SNX. And this was one of the probably most hyped projects last year, where I think the market cap at peak was trading around $1 billion US. So it's very controversial because of the fact that I think the founding team themselves doesn't have any gaming experience, but that, of course, that doesn't preclude them from developing a great game. So they built up a significant sized team to combat this, where I think right now they said on Twitter they have over 200 people on staff. So it's I would say, it's basically marketed as a AAA title in terms of the game. And what does the land do for you, so to speak, right? So if you're gonna be participating in the land sale, so the land basically allows you to harvest fuel, right? So fuel is, I would say, basically the commodity in the game that is needed to make things go, right? So basically it's a very important resource in the ecosystem that allows people to interact and build on top of this game. And so there are 5 tiers of the land assets, and these will all be descending price auctions. So basically, except for tier 5. So 4 tiers will be descending price auctions, where basically it will start from a really high price, and then it slowly declines as people don't bid on it. So the starting price, I would say, even for the lowest tier, starts at 2E, right? So my personal guess is the prices probably drop, a sizable bone amount, given that we're in a bear market right now. Before there's probably some demand. But yeah, I mean, so yeah, 4 tiers are descending price, and then the 5th tier, so the most exclusive and high tier, will be actually hosted live, where they'll be doing a Twitch event to auction this off, and this will be a ascending price auction, right? So where basically your normal bidding situation, where you basically bid a higher price than the other person to win the bid. So
yeah,
so pretty interesting. Yeah.
So will this land be tradable on secondary markets like OpenSea or?
Yeah, I mean, I would imagine, right? I mean, so yeah, given the fact that Illuvium, yeah, so to just note, I think Illuvium is built on immutable, as so I would imagine it will be tradable potentially there, or if not, I mean, definitely on OpenSea. But yeah, I mean, it remains to be seen. But a lot of controversy, given the fact that the price points are significant. They're going to be selling, I think, at least a significant amount of plots of land. So this will be a significant amount of fundraising that'll be going on. Let's see whether or not they're actually be able to clear it, I would say. So
Okay, let's move on to another news. So last week we have a new tech demo release from the other side game by Yoga Labs. At the moment, the game looks like Fortnite, but with apes inside it at the moment. So it is currently being built by a metaverse gaming studio called Improbable, which specializes in creating gaming platforms and engines that can handle hundreds of thousands of players in one server at the same time. So this could be what metaverse gaming can look like in the future, I think, where tens of thousands of people can interact with each other in a large open space, open world.
So just curious, I mean, so for this, right? I mean, did the price move after this news was announced, or I guess if we're in a downturn this last week, I don't know if that moved price.
I think the overall floor price increased by like 10 to 20% in the short term, but because of the bear market at the moment right now, it quickly fell apart and it's back to 2.8 ETH at the moment.
Okay, so not much of an update. I mean, yeah. So I think I read a thread on Twitter that talked about the game. Basically, I guess it's pretty impressive that they built a live game demo so quickly. And it's not just a cinematic trailer. I mean, so it's pretty impressive. So yeah, definitely remains to be seen. How quickly they develop this game. But I would imagine there will be a lot of anticipation for this. So
yeah, this is one of the largest metaverse gaming projects out there, and yeah, there's definitely a lot of expectations and the anticipations about this project. So moving on to the next NFT project we're going to talk about is Azuki. So the Azuki founder have been under a lot of heat recently after being discovered for abandoning 3 failed projects in the past. And the 3 projects were CryptoZunks, and Tendies. So these are low effort, low quality copies of the original CryptoPunks project. And they were abandoned by the founder quickly after their launch as the community lose interest in them. So in order to make up for the founder's wrongdoing, the founder have transferred all contracts, funds, and royalties back to the Funks and Zunks community and refunded the mid-cost of Tendies NFT. And after this incident, he promised more transparency and better communication in the future and proposed detailed plans for the future of the Azuki project in order to stop the dumping of Azuki NFTs. So for me personally, like although he made up for the communities of his old project, I still do not think this is like enough to recover for his bad reputation, because it feels like the only reason why he haven't abandoned Azuki yet was due to its success and popularity at the moment. And given his records of abandoning project, I think there's a high possibility that he will abandon Azuki as well if things starting to go south.
Yeah, no, I mean, yeah, no disagreements there. I think, yeah, definitely because of the fact that Azuki was his home run, so to speak. He's clinging on as much as possible and doing everything to shed the negativity around it. I mean, of course, unless you're a Azuki bag holder, you probably will probably feel the same way because of the fact that, I mean, end of the day, if you're a serial runner where you've proven yourself to not be trustworthy, I think for me, it's pretty hard to invest in a project where I know that there's a chance that the founder or the founding team would turn their backs against the community and any person that supported them if shit hits the fan, so to speak. So yeah, definitely. I mean, for me, I'll probably just observe the situation. So
Yeah. So moving on to the next topic, we have some new coins to introduce for our Huobi listing.
yeah. So I mean, for on the Huobi side, right? So last week, there were a few new coins that got listed on the platform. Of course, no investment advice or financial advice here, but just wanted to note these. So the first one is VRA, which is a digital currency that is created exclusively for esports, rarity gaming, NFT, and the video economy globally. Second one is ELON, so Doge ELON. I think it's one of these meme coins that basically combined the Doge and ELON together. And I think previously they donated a bunch of the supply to Vitalik, and then he basically sold or donated a bunch of that away too. So a meme coin for sure, just FYI. And then the last one is KAVA. So KAVA is a decentralized layer one, I think, built on the Cosmos ecosystem that basically is to enable cross-chain DeFi. They have a lending platform as well as a cross-chain money market application called Hard Protocol. Yeah, I mean, I think what KAVA was actually, I think I showed in one of the previous slides where they were actually one of those that were affected. I mean, it remains to be seen. I would definitely say that this does not mean that the project is bad, even though they were affected because by the Terra Luna-depeg situation. So definitely, if you are thinking about investing or trading it, definitely do your own research on that to see whether or not the project is isolated from the risk as a whole. So
yeah. So to accompany the new coin listings, Huobi has launched a candy drop event for its users. And users with an average spot trading volume above 100 USDT of any digital assets for the last 3 days can register for the event. And candy drop tokens will be randomly allocated to registered participants. Winners will receive the tokens for free, and prizes will be delivered to their accounts within 12 hours. So participants can win up to 100 UST per entry and up to 1,500 USDT per week. And also, one lucky star winner will be selected to win a grand prize of 1,000 USDT. And for today's session, we have also we have invited one of our Candy Drop Lucky Star winners to share with you about her experiences participating in this Candy Drop event. We'll try to reach her now.
yeah, I mean, so during the time when Hanson's reaching this person, feel free to drop your questions just to repeat in the Huobi live chat, and then we'll get to them after this candy drop.
So hi, congratulations on winning 1,000 USDT in our Candy Drop event. So we have some questions to ask you about your experience with Huobi and this event. So how long have you been trading? How long have you been using Huobi to trade coins?
It's about 2 to 3 months. Yes.
Oh, nice. So like, how was your experience using Huobi as a trading platform have been?
Oh, it feels good. The trading functions are convenient and easy to use, and the interface is simple and nice. Oh, and there are more different events, and I like to participate in many of them.
Okay, so how did you find out about Candy Drop?
I found it, I think, on the Huobi platform, yes, and many of my friends who trade cryptocurrencies also participate in it, and we often talk about it.
Okay, so like how often do you participate in this event?
I think I participate in almost every project. I myself enjoy trading coins, and my daily transaction volume can fully meet the minimum threshold needed for this event, so I hardly miss out on any of them.
Okay, so why do you participate in this event?
Oh, I think that Candy Drop is a very good event. Its highlight is it's very unique to Huobi. First, this event allows me to obtain the latest cryptocurrencies for free, and the projects are high quality. And second, Candy Drop lists new projects very often, so the rules are simple and clear, and the threshold for participation is not very high. Even new users like me can participate, and the prize pool is also very appealing. I personally enjoy this event very much, and since I participated many times, it has almost become a habit of mine to take part.
Okay, so like which aspects of the Candy Drop event has attracted you to participate in it?
Personally, there are a few things that appeal to me about Candy Drop. First, its new projects are well done. I mean, the diversity and high quality choices allow me to obtain cryptocurrencies that I'm interested for free, which has a positive effect on my portfolio. And in terms of this event, it's held like quite often, so the frequency is nice. It also has a low threshold for participation, and the price pool is nice compared to the newly listed projects on other platforms. I think that Candy Drop can meet my needs for obtaining new coins. Yeah, it's a diversity and the liquidity pool, the price pool that attracted me most, I think.
Okay, so you have mentioned a very good prize pool. Like, did you ever win any prizes before, and like how much are they worth?
Oh yeah, I think I've been lucky recently. I've won 5 or 6 times, totally about 300 USDT in rewards.
Like, do you have any advices for us, like which for Candy Drop and like which aspects can be improved?
Okay, advice. I do hope more popular cryptocurrencies will be made available in the future. So yeah, it's about more is better, you know.
I do agree. So, what do you think about Candy Drop's advertising?
Oh, it's advertised very frequently. Often reminded by the ads. I think you guys the ads do very good job.
Okay, so would you recommend Candy Drop to others, like your friends or family?
Actually, I've already recommended to many friends of mine who trade crypto, and they participate in many events with me too.
Yeah, it's nice to hear that you recommended Candy Drop to your friends as well, and I do really hope they can win some USDT as well. So yeah, I would like to thank you for coming to this Q&A section, and I believe that everyone now has a better understanding of this Candy Drop event. So thank you for your time, and I wish you all the best.
Thank you. Have a good day.
Okay, so
Okay.